Good afternoon. My name is Campbell McCrary. I'm a Vice President of Capital Markets at Amvest Capital in New York. Welcome to the Amvest Capital Inc. live webinar with Skeena Resources Limited. Skeena trades on the TSX as SKE and on the OTCQX as SKREF. We hope you'll enjoy today's program. It will be available in replay mode. Do feel free to type in your questions in the question pane of the GoToWebinar control panel or simply email them in and try and ask the questions in real time or after the webinar. Amvest Capital is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Please note this disclaimer. This call is for informational purposes only. We have with us today Walter Coles and Kelly Earl. Walter is the CEO and president of Skeena and has worked with several TSX-listed junior mining exploration and development companies throughout the past 7 years. And Walter's entered the mining business as part of an effort to develop a mineral resource discovered on family farmland in Virginia. Previous firms to his involvement there include Cadence Investment Partners and various positions at UBS in New York. He's got a BA in economics from the University of Richmond. Welcome to the show, Walter. I can hear you. I see your presentation. Please give us a year-end wrap-up, and we'll open up for questions.
Yeah, Campbell, thanks for the opportunity to present to your audience, and we'll do our best to be efficient with their time. So we'll dive right into our presentation. Just as a reminder, we've got 2 projects in British Columbia. They're both in the Golden Triangle. They're both past producing mines that we optioned and have since acquired from Barrick. One was called the Snip mine and the other was SK Creek, which is really our flagship asset. So you can see where we are on that map. Switching to our management team and board of directors, I won't talk about everybody, but I'll just mention the changes that have occurred in the last 12 months. On the management side, we've added Shane Williams as our Chief Operating Officer. Shane is an engineer by background. Most recently, he was with Eldorado, where he was Vice President of Capital Projects and Operations. He was in charge of building their Lamaque mine in Quebec. More broadly speaking, Shane's career is one where he's gained a lot of experience building open pit mines in the far north. He worked for Rio Tinto and was involved in building 3 large open pit mines, one in northern Sweden, one in Labrador, and one in Newfoundland. So I think he's got the perfect skill set to help lead our team in building SK Creek and Snip, which are obviously in northern areas as well. Turning to the board of directors, we've got 2 new board members, Suki Gill, who is the new chairperson of our audit committee. I've known Suki for probably, gosh, maybe 13 years, and she's a terrific accountant, and I know she's going to do a wonderful job for us as chair of the audit committee. Greg Beard also joined us. Greg is a finance person by background. Over the last decade, Greg was in charge of natural resource investments at Apollo Global Management in New York, a $300 billion private equity fund. So I think that we're continuing to upgrade our board and management team as the company continues to grow. Just a reminder about the advantages that we have in place between Snip and SK Creek infrastructure. We have 3 relatively new hydroelectric facilities that have been built over the last 7 years. Keep in mind that Snip and SK, when they were in operation back in the 90s, were both powered by diesel and propane. So big game changer today to have a cheap, clean, efficient hydroelectric power in very close proximity to both of our projects. And to give you some anecdotal, I guess information as to why that's such a big deal, I'm told that when Snip and SK were operating in the 1990s, energy represented as much as 50% of their operating costs. Today, with those hydroelectric plants, we expect energy to represent less than 10% of our operating costs. And of course, these are green power stations. There's no CO2 production from them. So the next iteration of these projects should be much more environmentally sustainable. Flipping to the next slide. Yeah, just a little bit about the history of Eskay Creek again. Legendary mine. This is our flagship. When it was in production from 1994 until 2008, it produced 3.3 million ounces of gold at an astounding 45 grams per ton. And on top of that, or along with it, was 160 million ounces of silver at 2,224 grams per ton average grade. So when you put those together, the gold equivalent grade was almost 2.5 ounces per ton. So one of the highest grade large mines ever put in production in the world. When they started mining, they used a 30-gram cutoff. After they built the mill, they dropped that cutoff grade to 15 grams. Our whole thesis here is pretty straightforward. We've got much higher gold prices today. We've got a much improved cost structure with the roads and the power stations there. And the third twist is we looked at this project as an open pit at Eskay. And with that, we've been able to drop the cutoff grades from those historic 15 to 30 grams down to around 1.5 grams. And with that, we've put together, delineated quite a significant resource there. We put out a PEA in late 2019, only a year ago. And the base case when we put the PEA out was $13.25 gold price, $16 silver price. And the financial metrics on the project at that point were astounding. 51% after-tax IRR, 1.2-year payback on capital, a project that would have a 9-year mine life and produce over 300,000 ounces gold equivalent production per year. So very few projects out there held by non-major mining companies that generate over 250, let alone 300,000 ounces per year. And all of this with a CapEx of only $233 million US. Reason that CapEx is so low is because this is a brownfield site. Again, we have a lot of that infrastructure already in place that we're able to take advantage of. Obviously, I should point to the lower case and the higher case. Even at $1,200 gold, this is a project that generates a 42% after-tax IRR, so still very robust at lower gold prices. And then if you look the other direction, if you look at a higher gold price, say $1,700 gold, the after-tax IRR jumps to 77%, and the payback on initial capital is less than a year. So it's a project that has the grade to be robust even in a lower gold price environment. I call that margin of safety. And at the same time, we've got tremendous leverage if gold prices go higher, which I personally think they will over the next couple of years. So let's just go over what we've accomplished in this previous 10, 11 months. We started drilling in February. We started our phase 1 drill program, and then to everyone's unfortunate surprise, the COVID virus hit, and we had to shut down like most people in March. It took us really until July to put into place our COVID prevention programs. But with those sort of safety precautions, we were able to get back drilling in July. We lost a couple months, so we sort of doubled up on drill rigs to try to make up for lost time. In October of this year, we were able to cut a deal with Barrick and acquire 100% of Eskay Creek. And since then, we've completed our phase 1 drill program, which was 34,000 meters of drilling. And that program was all of the drilling that we had to do, that we were able to do outside of Barrick's 25-meter buffer around historic workings. Once we acquired the project from Barrick, we were able to get rid of that restriction and start our phase 2 program, which we started in November and is underway right now. So far, we're making good progress. We should complete that program on December 20th, and that's another almost 48,000 meters of drilling. And let me add that since we've been operating this year, we've got 15,000 person days with no COVID cases so far. So we're pretty proud of that achievement as a result of all the COVID safety precautions that we've taken. So just as an update, right now we've got 12 drill rigs turning up at Eskay Creek. Every shift, we've got two-week shifts, and on each shift there are approximately 220 to 230 people So Eskay Creek right now is employing over 450 people. I take a lot of pride in the fact that during this sort of difficult economic time, we've been able to do our part to try to create some stimulus in the BC economy. I'm going to turn it over here to Kelly to talk about the resource and some of the geology.
Thanks, Walt. Hello, everybody. Thanks for joining us this afternoon. So I'm going to jump right into a quick overview of the geology, then really focus on the exploration successes that we've had so far, and then a look on where we're going to be drilling into next year. So this is a reminder of the current resource. So this is our current global resource that was put out with the PEA in November of last year. We're currently sitting at 4 million ounces at 4.4 grams per ton gold equivalent. It's divided up in two main pits, so the 21 zone pits and then the 22 zone pits to the south. There's some underground resource there that the pits have not captured, that we did not push forward to the PEA, and we're probably also not going to be pushing it forward to the PFS, but we do hope to be able to have an underground component to the mine in the future, and I'll show you where we would be looking to build up some of those underground ounces as well. So we're just in the middle of infill drilling. You can see the grade difference here between the indicated and the inferred. You can also see that there's over half the resource is still in the inferred category. So we need to do infill drilling to bring that into the measured and indicated category to push forward with our PFS. We'd hope to get about 90,000 meters done by the end of this year. It's looking like it's going to be more like 82,000 meters. And that's just because of delays because of COVID, but we're definitely going to get all the infill drilling done. We're going to push a little bit of that exploration into the beginning of next year, but all the infill will be done for sure. And of course, our target is to get that grade, that 3 grams per ton of the inferred, closer to the grade of the indicated, which is 5.9. So here's an overview of the project. Our current resource is in gold. You can see the pit outlines there in black. All the little blue dots are the historic drill intercepts, anything greater than 3 grams over 2 meters. We've, of course, been very lucky to have that. We use that as a tool to guide our exploration. So I've circled here some of the areas where we've had exploration successes so far this year. So the 21A zone, just below the current pit, we've had some new success in a lower mudstone and an even lower mudstone horizon. And then in the Eskay Deeps, that was a deep target that was completely unexpected, where we've had some success. In the water tower zone, which is near some old historic workings, and then that's a 21A highlight as well. So this is where we've had exploration success so far. We'd also will be doing some drilling in the 21C zone feeder structure and also the 22 zone. So that's probably going to come out towards the beginning of next year. So that's some exciting exploration potential to look to into the future. So I'll just take us through cross sections here so we can see some more of the highlights of the successes that we've had so far. So this is the 21A zone. You can see the pit limits there, and we did infill drilling. You can see those 4 drill holes at the top, and I've just highlighted some of the hits here, like this 25 gram per ton over 35 meters, right next to a 6.46 over 34 and an 11 over 40. So it's important to note that you can see we do hit pockets within there where we hit higher grade, like we're at that 25 gram over 35 meters. So that's exciting, and we'll hopefully be able to add to the resource. And then the nice thing about doing infill drilling on a VMS is that VMSs are often known to come in stack sequences. So VMS deposits just represent the seafloor. So our main horizon, the contact mudstone horizon, is there in dark orange. Once we do the infill, we let the drill holes go deeper. And sure enough, we tagged into a couple of lower mudstone horizons. So the lower mudstone zone, you can see 314 grams over 2.21 meters, 12.27 over 6. And then one drill hole hit an even lower mudstone unit, 6.26 over 4.2. These are extremely exciting targets for us, completely outside the current resource. And this is how we hope to be able to add an underground component to the mine in the future. So this is a prime target for where we'll go back to do some more exploration drilling starting next year. Then the other cross section is a exciting area called the water tower zone. This was a known area to us, but we were able to expand some of the mineralization there. You can see the PEA pit limits. So this is to the far north of the project. This is just outside of the pit. You can see the next zone and then the water tower zone below that. These are great targets because they're close to historic workings. The next zone has the potential to maybe be included in a potential expanded pit in the future. So these are all really exciting areas where we need to do some more drilling next year, and hopefully we'll be able to add some more ounces. But as I've mentioned before, our target this year was really to do all the infill drilling. We had about 80,000 meters of infill to do, and we really needed to get that done to keep on track with the PFS, and we are on track with all the infill drilling. So more exciting infill drill results to come before the end of the year. We've drilled 66,000 meters so far, and we've only released about 30,000 of those meters, so a lot more drill results to come. There's just some of the water tower zone highlights, and then I'm going to pass it back over to Walt to talk about valuations. I think you're on mute, Walt.
Sorry. Thanks, Kelly. I'm not seeing the screen. Is that me or are you seeing? There we go. Okay. So on this slide, we put this in here to just sort of highlight valuation. Right now, Skeena is trading at somewhere between a 0.3 and 0.4 times NAV valuation. So as the project moves closer to production, we would expect that number to gravitate up towards 1 times NAV. And so the obvious implication is that there's plenty of upside left in the stock price. The other point that's worth making is the denominator of the NAV, the project NPV. We'll be working on the next year to try to increase that denominator, which of course would give more upside potential to the stock price. On the second part of this graph or this page, we demonstrate the Eskay Creek grade versus the typical open pit grade of 1.5 grams. The wonderful things about high grade is it gives you margin of safety, but then there's some other things that maybe aren't so obvious. That a higher grade project allows you to be a greener project. You're able to use things such as less cement in your capex, less mining trucks in the production of your ore. So the fact that we've got hydroelectric stations nearby and also this phenomenal grade really make this a more sustainable type of project, and that's something we're pretty excited about. We have this slide in here to highlight the capital intensity ratio. So what that is if we take our capex as defined in the PEA, $233 million US, and you divide that by our projected annual production rate of 306,000 ounces per year, gold equivalent, you get $89 in capital cost per ounce of production. And you can see that this project ranks really well versus other projects, development projects out there. And there's 2 reasons for that. The first is, of course, grade. And then the second reason is that this is a brownfield site and we have a lot of that infrastructure already in place. As we look ahead, here are our milestones over the next 12 months. We've recently initiated the permitting process. As Kelly mentioned, we expect to complete the phase 2 infill drilling before the end of the year. And then at some point towards the end of Q1, hopefully, we'll have a resource update, a new 43-101 resource for Eskay. All throughout the year, next year, we will be doing infill and exploration drilling with a greater emphasis on exploration drilling next year than we had this past year. Also, in the latter part of Q2, we're targeting to publish the pre-feasibility study on Eskay Creek, which would then convert all of the indicated and measured resources at Eskay over to reserves. And we will also be commencing the full feasibility study for Eskay Creek with a target to complete that before the end of the year. So this is a very aggressive schedule of advancing Eskay Creek. And we'll also be drilling over at Snip and trying to figure out, can we somehow include Snip in the overall project plan? I'm pretty hopeful that we'll be able to do that. So it should be an exciting year next year. With that, I'll turn it back to Kelly to talk a little bit about Snip.
Thanks, Walt. So just quickly on Snip, we've started drilling there, and I actually got an update from site yesterday, I think it was, that they've just moved the drill to the last drill pad at Snip. So we're doing about 5,000 meters of drilling, exploration drilling at Snip right now. So we hope to have some of those results out before the end of the year if all goes well with the labs. So just a quick reminder on Snip, we acquired this from Barrick. We own it 100%. Hochschild Mining does have an option to acquire a 60% interest in this project. That option is good until October of next year. produced 1.1 million ounces at 27.5 grams per ton, so another extremely high grade past producer. We put out our first resource estimate on this project earlier this year. It's sitting at 646,000 ounces, so not very large, but the grade is spectacular. It's at about 13.5 grams per ton gold. This is an all gold deposit. It's narrow vein pinches and swells, so it's a great little deposit. It's clean ore. We're looking to see if we can add some more ounces, and the area that we've had success in is an area called the 200 footwall, which I'll show you here. This is where we had that spectacularly high grade hit, 1,131 grams over 1.5 meters. This is in a new zone. It runs parallel to where the original twin vein was that was mined out historically. So this is the area where we focused our drilling, and hopefully we'll have some exciting high grade results to come out of Snip. And then we'll look at the potential down the road of if it makes sense to add Snip to S-grade. Does it make sense to truck the ore from Snip over to S-grade? As I mentioned, we're also looking at the potential of expanding one of the pits at S-grade or adding an underground component. So those are a few of the things that weren't on the timeline that Walt mentioned, but we're all looking at accomplishing next year as well. So lots of exciting news to come out of Snip as well. The last thing I wanted to touch on is our relationship with the Tahltan. So we're very fortunate to be in Tahltan territory in the Golden Triangle. They consider themselves to be a mining nation. They've put Red Chris and Brucejack into production. And I'm very excited to announce that we're about to launch our impact benefits agreement with the Tahltan. So we should be on track to get that done next year. So we're excited to move forward with our Tahltan partners. And then finally, capital structure. We just did a $46 million financing, so we're well financed right now. 214 million shares outstanding, about just under a $500 million Canadian market cap. Exciting that we had analyst coverage start this year. So we have 6 groups that are now covering us with analyst coverage. So that was a big milestone for us this year. Our share price has come a long way, but we have a lot of exciting milestones to come out in the next 18 months. So we've got a long way to go with our share price too. So with that, I'm going to ask the Amvest team to join us, and Walt and I can answer any questions that you guys have.
Sure. You mentioned Tahltan briefly. Have you started the official social baseline studies? Is that what you referred to, or is that something different?
So the environmental baseline studies are all complete, actually. That was on the timeline that Walt touched on. But we're doing what's called an impact benefits agreement, which is what you need to do in Canada if you want to put a mine into production. And excitingly, we're about to kick that off before the end of the year, hopefully. And that's really impressive because normally you're much further along in the process, like past the PFS before you'd start that. So we're excited to get that going right away. And that is because of our strong relationship with the Tahltan and the fact that we like to involve them with everything very early on in the process, which is what Justin's team has done all along, and it's worked out very well.
These details are buried in your filings, but if you could simply highlight the terms in which Barrick sold the property, that would be helpful.
You're on mute, Will.
Thanks, Kelly.
Okay.
Yeah, we originally had an option deal that was a 3-year term and a $10 million purchase price, but that would have left Barrick with a back-end right into the property where they could come back in and become a 51% owner operator by paying us 3 times our cumulative expense. So we amended that original option we announced it back in July, an amendment to that for which Barrick gave up their back-end right. And in return, we gave Barrick 22.5 million shares of Skeena and also 11.25 million warrants with a strike price of $270. Sorry, just gonna grab a sip of water. So the other things that Barrick got were a 1% royalty on the property, a right to participate in future financings, and a right to appoint 1 person to our board. And with that, we got 100% ownership.
What are the terms of Hochschild's 60% option on Snip? Actually, 2 people asked that question.
Yeah. So it was a 3-year option in return for Hochschild making an investment into Skeena at a significant premium to the market price. And the terms of those options give Hochschild 3 years, ending in October of next year, to decide if they want to come in and earn 60% of the project. If they were to pull the trigger on that option, they would have 3 years to spend 2 times what we have spent. And keep in mind that that tab is ongoing. So as of now, it's we probably spent, I don't know, 26, 27 million Canadian dollars. So if they were to pull the trigger tomorrow, they would have to spend just over 50 million to earn the 60%. And based on my discussions with them, they have said to me that they want to see a somewhat larger project before they would be interested in exercising the option. Keep in mind, right now we've only got 650,000 ounces there. So 60% of that is, call it 380,000 ounces. It's not really a large enough number, I don't think. But keep in mind, we are doing exploration drilling right now, and we might be able to make this into a bigger project. Hochschild has an excellent capability for underground mining. So I don't see it as a loss if they were to come in and exercise the option. We would be bringing on a very skilled partner, and we would probably be carried into production at Snip. So, I don't know which way it'll go, and they have almost a year to decide what they want to do.
I'm just going to squeeze one more question in and then pass it on. A lot of people will ask this, Walter, has your answer changed from and Kelly, when you're stopped on the street, so to speak, and you're asking, when are we going to see a mine? When are you going to be in production? It's an open-ended question, but how do you answer that? And has it changed over the last year as we kind of wrap up here?
Well, I would say I definitely think this is going to be a mine, for sure. As long as the price of gold stays over $1,000, this is going back into operation. In terms of the timing, we are working with the Tahltan and the government to nail down that timeline to when we can get this in production. I think that given the downturn in the economy in BC, there is some pressure and some earnest desire to see what we can do to accelerate the permitting process. And hopefully over the next 6 months, we'll be able to dial in exactly on what that's going to be. I don't know if you have anything, Kelly?
Yeah, just that it's important for everyone to remember we're only at a PEA stage. So, even though we're excited and we're pushing this pretty hard, it is only at a PEA stage. So one of the reasons we brought Shane on, our new Chief Operating Officer, is an engineer. He's done this many times before. He's leading the PFS. All those questions will be easier for us to answer as we head into next year and get closer to the PFS and have had more discussions with the government and the Tahltan. So we're doing it as fast as we can, but we don't want to give an exact timeline because we don't want to miss the target.
Right on. Gabe?
Thanks, Cam. Congrats, Walt and Kelly, on a great year. It's been great to be a part of and watch. And so just wanted to maybe just touch on a little bit of the phase 1 program. How many meters are left there to release to market?
So the phase 1 program is all done. That's what was outside of that buffer. It's the phase 2 that we are still releasing. So we've completed 66,000 meters so far this year, and we've released only about 30,000 of those. So there's another 36,000 meters in the pipeline, and then there's about another just under 20,000 meters on top of that yet to drill. So over 50,000 meters worth of drilling left to come before the end of this year and into next year. So a lot of drill results still to come.
Great. Can you comment a little bit on sort of the results you're seeing so far and how they translate into resource conversion success?
Yeah, so we're pretty fortunate that of the style of mineralization at Escape VMS, it represents the C4. It's extremely consistent and tabular in nature. So every time we think we're going to hit the zone for infill, we hit it. We have the odd little surprise where it might be slightly higher grade, but the important thing is we hit it everywhere that we want to. So we're seeing, I'm not going to speak for Paul, our VPX, but he's very happy with the conversion rate from inferred into indicated. So that's going extremely well. In terms of exploration, You know, we've had some great exploration success. We're not, unfortunately, going to be able to do all that we had hoped to this year, and that's because we've lost quite a few months due to COVID, but the safety is the most important thing, and then infill was second to that, and then exploration was on top of that. So we've released all our exploration results so far for this year, but we're going to get back in there in the new year. So next year will really be the year where we focus on exploration. I think Paul's team has laid out 100,000 meters. That's a wish list. We're not going to do it all. It'll be very results driven. Once we wrap up the program this year, we'll sit down with the technical team, go through where all the exploration successes are, and really prioritize the top targets to do more exploration for next year.
Great. Yeah. So maybe a little earlier or premature, my next question, but I was just wondering in terms of the growth of the resource, or where you guys are seeing growth in resources. Is it you seeing it down dip, or you're seeing it other high grade zones are being defined, or how's it coming together?
So we're seeing consistency in the infill, which is exactly what you want, with maybe the odd area where it's slightly higher grade. So that's how we hope to get that 3 grams of the inferred closer to that of the 5.9 of the indicated. So that's on target. In terms of the exploration, I mean, I'm very excited about the lower mudstone zone. So the lower mudstone and the even more lower mudstone, you know, it's where we had that 314 gram hit in the 21A zone. That's a prime area. I know Paul's quite excited about the water tower zone and the potential there. He's happy with the mineralization style that we've seen there. We unfortunately are just running out of time this year to go back and do all the exploration drilling that we want to do. So it's really going to be a target for next year, but we're definitely on track to have a larger resource out in the spring.
Okay,
and Gabe, let me just add that unlike most projects in the Golden Triangle, because of the roads and the camp that we have, we are able to drill year round here. So yep. We're drilling right now, and my expectation is we'll be drilling in January and February. So when we talk about starting exploration next year, we're not talking about starting it in May, June, or July. I mean, our intention is to be in there in January and February, starting off these exploration programs.
Great. Yeah, that's very helpful to have that infrastructure there. How do you look at met work, sort of like further met work? How are you looking at more programs down the line?
Well, we did probably pre-feasibility met work on the PEA. So as part of the pre-fees, we're taking that to the next level, pushing it towards feasibility studies. We should have a press release, I think, out in the next few weeks, providing sort of an update on our, on the met work that we're doing right now, and that we've finished over the last couple months. So I rather than steal Shane's thunder on that met work update, I'll leave you guys hanging, and you just have to wait for Shane's press release on that.
Good. Well, you've always given us good surprises, so we'll keep hanging on for this one.
Okay.
Thank you.
Yeah, thanks for the presentation, guys. So recent financing was what percentage was taken up by existing shareholders versus new shareholders that are interested in the story, roughly?
So we did an overnight deal, so it all came together pretty fast.
Yes.
We had 2 significant New York institutions that came in for slightly more than half of the total financing.
Those were new shareholders.
New shareholders. So we had over $100 million of orders for the financing. Wow. So it was heavily oversubscribed. We tried to do our best to allocate to supporting shareholders. Unfortunately, they're just no one was able to get really what they wanted in the financing, and I know some shareholders were frustrated, but the other side of that is it's a high class problem when people are eager to support the company in financings.
And then also some of our existing shareholders who didn't get quite everything they wanted in the financing, they bought on the market afterwards. So always nice to see that on-market support from our existing shareholders as well.
Yeah, most definitely. That's good. And then, so the new the new drill results, and how are you seeing this area transition from, like, Barrick looked at it as underground versus the discoveries you've had at depth?
Yeah, so the drill results, the infill that we've had. So when you put a project proposal for permitting together, you need to stick with a plan. So the pit,
Yep.
the open pit is the plan that we're sticking with to push forward through the PFS and into the full feasibility. And you can't really go in 6 months later after you've found some great new underground targets and change the permitting plan. So we're really pushing forward with the open pit, and that's what all the infill's shown. The additional exploration that we've shown with the underground, we'll manage that by hopefully putting out an updated PEA at some point next year, which would show a phase 2 to Eskay Creek. So phase 2 could be adding Snip, adding an underground, pushing back the PEA or the current PEA pit size to make the pit larger. So that's really how we're going to handle that. But for now, the pit that we proposed in the PEA, what we push forward to the pre-FS should be fairly similar. And that's just from a permitting standpoint, we have to stick with that as we push everything forward.
Yeah, gotcha. And then now, you guys own the product 100%. Weren't there some historical areas that you weren't able to explore before that were quite exciting?
Yeah, so as I said, there's about 100,000 meters worth of exploration drilling that Paul and his team are pretty excited to look at. There's regional scale targets, porphyry scale targets, an old adit area. There's a lot of high priority exploration, but unfortunately, as I said, we just didn't get a chance to get to it this year, and a lot of that will have to wait for next year. But what we have discovered this, yeah, go for it, Walt.
Yeah, Stu, permitting a mine project takes a couple years to do, and to get in the track of getting this mine permitted, we had to, as Kelly say, put a pin in what the project description is going to be. So we needed to get the infill done to be on track with this pre-feas and feasibility for next year. If we chosen to wait to do all the exploration and not do the pre-feas and the feasibility to like 2022, that would push the start date on construction back a year. So we're balancing a couple different priorities here, and the way we chose to do it was, let's get as much of the infill drilling done as possible in 2020, and then 2021 will be the year of exploration to really show how much we can grow this overall project.
Makes sense.
But hopefully we'll have some exploration success at Snip. As I just mentioned, we're just starting the last drill pad there. So with any luck, we'll have some exciting exploration success out of Snip. We know how much the market loves exploration drill holes.
Yep.
Sure. Thanks for that, Artie.
What is the distance between SK and the Snip? And you mentioned there is no ore transportation synergy between them. Can you comment on that again, please?
Yeah, so right now there is not a road connecting the two. We're doing a engineering study right now on the cost of implementing that road, which
well, there's about three quarters of a road that connects them. There's a gap to go out to Snip. Yeah.
The gap's around 17 kilometers, as I recall, and the total distance between the two is probably about 45 kilometers. Kelly?
Yes, about 50 if you count the bends in the road. So yes. So about a 17-kilometer gap, but that permit has already exists to build the road. So right now, once we finish the drilling at Snip, then we will pass it off to the engineers to see if it makes sense, the cost to build the road and to truck it, does that make sense to add it to the Eskay Creek project? So we're not quite there yet. We need to get the drill results out first.
Thank you. And what are the conditions of the underground workings at Snip? Do you think those will be helpful for future exploration? How?
Absolutely. The ground conditions at Snip are excellent. It's kind of the opposite from Eskay Creek. Eskay Creek is kind of legendary for poor ground conditions. Snip's the opposite. So I want to say it was back in 2017, we opened Snip up, the underground, and we refurbished them. We added the ventilation and electrical lines so that we are able to do exploration from underground off of some of the exploration drifts that date back to the late 1990s. So far, we've pursued a surface drill program, exploration program at Snip, but at some point next year, we may consider opening Snip back up again and doing further exploration from underground.
And the other thing I'd note about SK in terms of the underground conditions is it's paste backfilled. So it's not a concern from when we're going from an underground mine to an open pit mine because it's been paste backfilled with river rock. So it's solid from an engineering standpoint for open pit mining.
Thank you. And you mentioned, correct me if I'm wrong, 400 people are working on the site at SK?
No, there's 2 shifts, and each shift ranges from about 220 to 230. So in total, I just meant the total employment, people who are working there throughout the month, it adds up to around 450 people.
I see, mostly field people, tech field. Yeah.
Correct. It's
Yes,
drillers,
geotech, drillers, electricians, builders, cooks.
Environmental consultants.
Yep.
Engineers. Staff. We're almost done refurbishing the SK camp to be able to use that. So there's a number of people up there working on that facility.
Thank you. And for the SK Creek, is there any responsibility for you guys to monitor on the site? Any other responsibility from the historic operations?
Yes, when we acquired the project 100% from Barrick, we took over all of the environmental obligations related to SK Creek in the same way that we did when we took over Snip. So those obligations require us to continue the water monitoring that Barrick was doing on a quarterly basis, and we have a whole staff that's more than capable to handle those duties.
And at the current resource, what is the cutoff grade, and what will be the one, like a potential one, when we compare the upcoming cutoff grade and the current one?
Yeah, the cutoff grade for the current resource is 0.7 grams gold equivalent, and for the PEA, the cutoff grade was 1.5 grams in the mine plan. For the upcoming resource estimate, I believe we'll probably continue to use a 0.7 gram cutoff. I don't know about the mine plan on the pre-feasibility. We'll again leave that to Shane to guide us on what he thinks is appropriate.
Thank you. Campbell?
Sure. Someone commented, why is 40% of the NAV undervalued? Is that an accurate statement? And maybe just can answer broadly, are you satisfied with your valuation?
Of course not. I mean, like we think this is an extremely rare asset. It's an asset that's going to produce over 300,000 ounces a year gold equivalent. It's in a politically stable jurisdiction. It's got some of the best grades of any open pit mine in the world. So in my mind, this asset should trade at a premium valuation to other development stage projects that are out there. So I think the person who asked the question was wondering, is 0.4 times NAV, is that are we happy with that valuation? And again, the answer is no. And I would expect that as we advance the project and increase the confidence levels through the pre-feas and the feasibility study, it's very normal to see a project like this advance up that valuation curve, from the 0.3, 0.4 up to the 0.5, 0.6, and eventually when it's in production, it should trade at, at least a 0.1 times NAV. So that's what our team is working on, is advancing this project as quickly as possible to get that valuation reflective of what a project in production would be valued at.
What are the tangible benefits to the Tahltan Nation pre-production? Would they prefer underground?
Well, I think that the history of other projects that have been permitted there shows that the Taltan are pretty sophisticated, and they're able to look at each project on its own merit. And I'd point to, recent projects that have been permitted and put in production. You've got Brucejack, the Pretium project, which is an all underground project. But then you also have the Red Chris mine, which is an open pit copper gold mine, both of which are in the Taltan territory. So I think that the Taltan are pretty sophisticated, and they'll be able to look at Eskay Creek, and I hope that they'll be able to and believe that they will be supportive of this project as an open pit mine. And the reason for that, let me add, is because we're going to do this project in a way that is protective and sustainable to the environment, and the Taltan will be with us every step of the way on the individual decisions that go into designing this project. They will be included in that decision-making process, is what I mean.
Now that you have 100%, can you get into the existing workings?
We could, but they are paste backfilled, as I mentioned, and there's no need for us to get into them. It's a pretty shallow deposit. I mean, the maximum pit depth is only 236 meters. So all the drilling we need to do, we can do from surface. So there's no need for us to go to the expense right now of opening up and going into the paste backfilled underground workings.
Yeah, nor really an advantage.
No.
Keep in mind that all of the historic resources that we've identified are all at open pit depths. The limited amount of exploration drilling that we've done deeper, where we did have some good hits that Kelly highlighted, those are underground opportunities, but there are no current underground workings right next to those hits that we have. So that's something that needs more investigation, and hopefully there will be an underground component to this project in the years ahead.
Someone recalls in past producing Barrick operations weren't allowed to drill, or couldn't allow addition to the resource. Has this changed, or is it part of any new drilling?
Okay, I'm not sure I completely understood the question, but I think maybe they were referring to the historic restrictions. While it was an option project, we couldn't drill within 25 meters of historic workings until we purchased the project. Now that we own it 100%, we can pretty much drill anywhere we want to on the property.
Great. Someone asked any outstanding British Columbia issues. So maybe give us an update on BC as a jurisdiction and your experience.
So it might be in relation to there was just an election in British Columbia, but fortunately the NDP was reelected, and our mines minister Ralston has stayed the same. So we're on track. Walt, did you want to speak any more to that?
Yeah, I mean, I would say both the Liberal Party and the NDP in recent times have both been very supportive to mining. As Kelly mentioned, the NDP were reelected. We have a very positive relationship with the current politicians and regulators, and so I don't see any changes going forward from what we've experienced over the last year. We found the government to be very supportive of this project.
Did Barrick buy into the recent fundraiser?
No, Barrick did not participate in the recent financing. And keep in mind, they told us that the reason they did not, or the reason that they were willing to give up the back end right, is because this project in its current state, as defined in the PEA, does not meet their tier 1 criteria. So Mr. Bristow, the CEO of Barrick, has said numerous times publicly that he's looking for mines that will produce at least 500,000 ounces gold equivalent per year with a minimum mine life of 10 years. So we're not there. And so from that regard, it's maybe not a surprise that they didn't participate in the past financing. Having said that, I can tell you that our entire management team, we feel quite motivated to prove to the world that this can be a tier 1 mine again. And that's going to come out of the exploration that we do next year. We hope to be able to substantially increase the size of the resource that's there, and then consequently increase the production profile in the years ahead of this mine.
would you say you are fully funded for next year with the backs of this the recent fundraise?
Depends how much exploration we want to do.
We've said numerous times that the exploration budget next year should be results driven. So if we get good results, we're likely to increase that exploration, the amount of money that we put to exploration funding. Having said that, the capital raise that we did should take us a good bit of the distance to covering both the feasibility and the pre-feas studies at SK.
Final question, thoughts on the value of the old tailings?
Yep, we are planning to put some drill rig onto Albino Lake in January. Not different from the tailing facility, that's the waste rock lake.
So that's weather dependent. I would put a caveat there, weather dependent. As long as the ice is thick enough, we plan to drill it in the new year, yes.
Yeah.
Good.
But in terms of value, it's just too early days because we haven't drilled it yet.
Want to thank everyone for tuning in. Had some great questions, and congratulations on all the work, guys, that you've done to date, especially this year, banner year. You can follow Skeena on the usual social media places, and Amvest for that matter. With that, a closing statement from Kelly and Walter, and we'll meet again next year.
Kelly, you want to go first?
Sure. I mean, first of all, I just want to thank the Skeena team. I mean, Walt and I have been with the company the longest. Man, have we come a long way. I think we had less than a $20 million market cap, maybe 15 when I started with the company 4.5 years ago. So wow, has it been exciting to go from that to $500 million, which, well, I know we want to go higher, but you got to keep that in mind. We've already come a really long way. It's been pretty exciting. The team's built out. We're in a really exciting place. I'm ecstatic about the team members and the board members that we've built. We're just so undervalued compared to our peers for the quality. I consider SK Creek to be a once in a lifetime project to be a part of as a geologist. I don't think I'm ever going to be part of another project that puts out the results, the ridiculously high grade results that SK puts out. And I'm just so excited to hopefully be at the mine one day when we start production. I'd like to see a gold bar poured, but we're probably just shipping a concentrate. So but I still hope to be there the day it opens, and we built a team to take it there, and it's going to be an extremely exciting next 18 months for Skeena and for SK Creek. It's this time next year will be a whole new company. So yeah, pretty pumped and proud to be part of the team.
Yeah, I'd add that we're not really a management team that's backward looking. We don't rest on our laurels. I mean, we maintain a pretty heavy pressure. Internal peer pressure to keep that performance level very high. And as we look ahead over the next 12 months, it's going to be, what can we do to advance this project quicker? What can we do to make this a better project? That's just the way I would say that's our culture at Skeena. As far as our team, I would say it's more than just the board and the management. It's also our shareholders. We've been very fortunate to have some great shareholders who have been willing to take a leap of faith with us as a younger team, and I think they know we're really, really hungry and nothing's going to stand in our way of making this a success. So my thanks to all of our shareholders who have supported us so far, and we'll do our best to make sure this is a rewarding investment for you guys. Thank you.
Thank you, everyone. And good day, and we'll be queuing you for some feedback that's really important. It'll get to Walter and Kelly almost instantaneously. So with that, good day, everyone. Thank you.
Thank you.
Thanks, the Amvest team.
Thank you.
Thanks.
Bye.